Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month lead and tin. I'll start with LME 3-month lead. I have to say this, I'm afraid, but I have prattled on for quite some time now, if not endlessly, on how great a comfort it had and still is that the market has once more kept within the breach but as yet unbroken and still valid May to October 2020 bullish shift pitchfork, which was originally drawn now over a year and a half ago. We are still within this pitchfork, and it was and will continue to be a major influence on this market. Okay, so I think it's better to just recap some of the more recent significant actions. So, since the spike and fall in early March, the market halted its decline 5 weeks ago at the lower time, currently 22.88 of this previously mentioned bullish shift pitchfork. Prices have since risen, up through all the moving averages, as well as some of the 50% Fibonacci lines, before cannoning into the middle time, currently at 24.58, where it was rejected 3 weeks ago. The market has since dropped down to the combination of the big old 50% Fibonacci line of the 2010-2011 move at 23.78, which along with the sharply rising short moving average currently at 23.93 have halted the decline and started a move higher. That eventually led to last week being made into a weekly key reversal up, if only just. Then today, prices opened higher, if only by a little, before punching up through the congestion at 24.43, 24.50, the middle time, and even the more recent 50% Fibonacci line at 24.66, before running out of steam and dropping back down below the close of Friday's session, if only just. I can surmise that the move higher was as a direct result of the weekly key reversal up, just made last week, but it was not sustainable, not managing to even move up to the resistance at 25.08 before falling back down. The drop, made later on today, now sets up today to be a possible daily key reversal down, a strong counter to last week's action. If we close tonight below 24.44, then we'd be on. At the moment, we're actually sitting as an outside week in between the last two closes. This is something to watch out for, nevertheless, for tonight. It also opens a question, the what-if question, as to whether the move up since mid-March could be seen as a possible attempted bullish halfway rotation. This question, the attempted move, is I think still open and one that I will address properly later on. LME 3-month tin. I am repeating here once again, and I'm sorry if you've heard this first bit before, but it is so necessary, I'm afraid. So I've been repeating this bit again and again for over a year now. It is this: the overall bullish incentive is still, surprisingly, alive, well, and still strong here. This may all sound trite, but it's important to know that the original move up from where all this bullish rise in LME 3-month tin was generated from was back within the January to March 2021 bullish shift pitchfork that started way back in March last year. What we have recently seen was a break up and over the upper time, currently 46.505, created by yet another fresh attack on the upside for a new, more acute January-based bullish shift pitchfork. However, this eventually failed with the big drop we saw in early March. The market punched down through the upper time, the middle time, currently at 44.125, and even the lower time, currently at 41.745, before finishing up between the lower time and its long-term partner, the rising medium moving average, currently 42.020. Since then, prices have moved higher, temporarily, over the middle time and its long-term partner, the short-medium moving average, currently 43.680, even getting up as far as the very recent 50% Fibonacci line at 45.040, before moving back down to just underneath the middle time and its partner, the short-medium moving average. All this action set up the conditions for a possible monthly key reversal down in March, but we ended up instead with the lesser outside month. That is where we are now, back within the broken but still influential January to March 2021 bullish shift pitchfork. I just wish to finish on the words that I have echoed here for a year now. It is these. I'm sure you as well believe that no market can head in one direction all of the time forever. Though this metal has been giving a pretty good impression of such a market. And this brings me to my final point, the same final point which I've repeated now from previous commentaries many, many times. It is this, and I quote, "It can be hellish to rely on only one pattern because it can be hellish when it breaks," end of quote. Well, it has been broken and has been pretty hellish. The question now is, has the market recognized this break and repaired it such that we continue within this long-term broken bullish shift pitchfork, or will it change? Now, just in case, there is the beginning, just the beginning of an argument for looking at the mid-March to date action as the start of a possible ascending triangle, and maybe the whole of March to date action as a possible bearish halfway hesitation, or even longer, a possible diamond pattern. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.